of you. Myself, Dr. Imlaq Sheikh, with my co-authors Leena Ajit Kausal and Professor Priyanka Vallabh. Today, we are presenting one of our working paper uh, on households' perception and expectation and India's gold market. Evidence from Reserve Bank of India's Consumer Confidence Survey. So, this is one of the first empirical attempt in which we try to align a survey which has been conducted by RBI. Like they are every quarter now, every 2 months they conduct a survey of 6,100 households about the outlook of Indian economy, what is their current perception, as well as like what they are thinking about for next 1 year. So based on those data and the indices that they have constructed, that is current situation index and future expectation index, how households perception and expectation that impacts this India's gold market. So this is the outline of our presentation. Introduction, review of earlier studies and hypothesis formulation, data description, descriptive analysis, and our empirical model, discussion, findings of the results, and we will end with conclusion and policy implication. So this is a synopsis of our work. Households' perception and expectation about the economic outlook, employment, inflation, income, and spending depict the important impact on asset prices. Hence, study aims to establish the relationship between consumer confidence and the gold market in India. Our study employs RBI's Consumer Confidence Survey from 2012 to 2023, considering current situation index and future expectation index. And the CC survey's important dimensions include household perception and expectation on the current economic condition, employment, prices, inflation, income, and spending. So in order to gauge gold investment India, we consider investment in gold futures, bar and coins, jewelry, ETF, gold ETF holdings, as well as overall gold demand in India. There seems to be an asymmetric association between households' optimism and pessimism and gold investment in India. The relationship is more pronounced during the major economic shift and changes in the gold regime and regulation. Households' current perception explains gold investment with optimism. A decrease in the current perception lead to rise in the bar and coins investment and jewelry and overall gold demand. However, the household's future expectation contribute marginally to gold investment like gold ETF and gold futures. Indeed, MCX-based gold price and consumer confidence hold important links. A rise in the current situation and future expectation results in the rise of gold purchase or investment, while it holds an asymmetric relation during this particular period due to some policy shift during that particular period. Household perception and expectation and the gold market in India have several policy implications, like households' disciplined investment in gold despite the rise in the gold price draws the attention of the policymaker to work more on the financialization of gold product. So right now, like in India, we have a lack of gold-backed products. And hence, like there is a more reliance over investment in the physical gold. So we can reduce the reliance over this physical gold. Further, agencies and financial institutions can work on financialization, financial literacy, capability, and financial inclusion to moderate the household's perception and expectation. So just to introduce our work, prices of gold dependent on demand and supply in the short run, while in the long run these are affected by inflation and the marginal cost of gold extraction. Supply of gold depends on current price of gold and the current interest rate, the default risk premium, and the convenience yield. So demand for gold is categorized in two ways, like use-based and the asset-based demand, like jewelry, bar and coin, metals, electrical component, and based on asset investment that depends on the factor like exchange rate expectation, inflationary expectation, fear, the return on other asset, and lack of correlation with other asset class. So in past years, especially after the financial crisis, gold prices have fluctuated considerably. This fluctuation attract the interest of researchers and scholars to understand the reason or the forces that drive the movement of gold prices. Gold is considered an important asset because of its a diverse role, like an investment asset, diversification, benefit, financial arbitrage as a store of value, political unrest, hedge against currency risk, potential safe haven, or we can say hedge against the inflation. So here we try to answer two research questions. Does consumer confidence matter for the gold market? Does consumers' current situation and future expectation affect the gold market and investing in India? So we try to link our research question based on rational expectation. Decision regarding investment in gold have their root in behavioral sciences, which depict the rational behavior followed by consumers. While decision making, consumers are rational and they take decision with due care after considering various factors. A critical question that we have to answer and address: what are the intuitive and theoretical reasons that can lead one to think that consumer sentiment predict or impact the gold market? We know sentiment may be optimistic or pessimistic. Positive sentiment are thought to boost asset prices, while negative sentiment are thought to depress them as well. So a strong and persistent sentiment can lead to irrational exuberance, while at the extreme level, this sentiment may be linked to the propensity to speculate the market. And a study from Deba and Grossman evidence that actual price movement of gold did not involve rational bubbles, as the existence of rational bubble make time series gold prices non-stationary, while relative price movement of gold involved rational price bubbles correspond to market fundamental. So here in this study we employ consumer confidence index. Households' perception and expectation play an important role in India's gold market. Representative of this HP is CCI. It represents the consumer's confidence or sentiment about asset pricing, economic situation, employment, prices, inflation, income and spending kind of factors. These factors have their individual impact on gold segment, covering gold, futures, spot prices, gold ETF, jewelry, gold bar and coin, consumers' gold demand supply. It is the consumer confidence that induces them to invest in assets, particularly in gold, in various form. So we use RBI's these two indices and their sub dimensions, which is available on quarterly as well as now bi-monthly. And this is our conceptual depiction of relation between the consumer confidence and the gold market in India. So we try to explore some of literature which is available on this consumer confidence and the asset price, and based on that we hypothesize consumers' current situation and future expectation and gold investment are positively or negatively associated. Then we also take into account the sub dimensions of this indices, like economic situation and employment and how it is influencing the gold market. And based on that, we hypothesize consumers' current situation, future expectation in relation to economy and employment contribute positively or negatively to the gold market. And further, we take into account general price level, inflation, and gold market. So sometimes consumer sentiment, which is very closely associated with the general price level, and mostly this kind of information available every month from the MOSPI, and consumers they follow. So there is the impact of price level as well as inflation expectation on the asset price. So these are some of the studies. They explain that there is a relation between asset class, gold investment, and inflation. So we hypothesize consumers' current situation and future expectation about price and inflation contribute positively or negatively to the gold market. Then income and spending plays a great role. Like what is households expectation about their income increase and what are their plan for spending. So these are some of the literature that talks about the relation between asset allocation investment across different asset class based on income and spending. So we hypothesize consumers current situation and future expectation about the income and spending contribute positively or negatively to the gold market. So in order to validate what the hypothesis that we have set, we take into account the data which is available from RBI as well as from World Gold Council. CC data is available from RBI's website, and they publish this data on a quarterly as well as bi-monthly scale by serving the 6,100 household across 19 major cities. So many studies in the existing literature have employed country level data. For instance, in the context of Denmark, they use Danish expenditure and saving survey. Australian context, they use this household data set. And in the US context, they are using this national financial capability data. So these are the variable under investigation. And we have presented here correlation metrics, like how these various forms of gold, like physical as well as gold-backed gold product, they are associated with consumer confidence, consumers' perception and expectation. And we have run this unit root test to see whether there is a presence of trend in the time series variable, and accordingly we have formulated our regression specification. So this is a summary statistic which shows that on an average, investment in the bar and coin stood 48 ton, and total for the sample period is around 2,186. And investment in terms of jewelry stood for the sample period 2012 to this 2023 around 6,360 ton. So this is a time series plot of current situation index and future expectation of Indian household, and we can see that current situation index remains below 100, almost like a post COVID and slightly after first and second wave of pandemic, like 21 and onward, it has slightly improved, but still it is touching to 100 and below 100. But throughout the sample, we can see future expectation of Indian household remain very optimistic, and which is appearing plus 100. So plus 100 is better, and below 100 is we can say households that net response is pessimistic. And again, this is the time series plot of gold prices reported 10 gram, and consumers overall gold demand as well as jewelry as well as demand for this bar and coin, investment in the bar and coin for the given sample period. And at the same time, gold backed product like MCX futures as well as ETF holding. And we can see here in the second graph there has been sudden jump in the investment of ETF gold. When the first gold ETF was launched in 2007, it was a notable success. However, the rising equity market proved too much of temptation, and demand was soon dented. Not until the pandemic caused economic alarm did the ETF market recover, and by the end of this 2023, gold ETF holdings stood more than, we can say, 40 ton. So this is based on the literature and the theory that we have reviewed, and we depict our empirical model here. GT is the variant of gold, physical gold as well as gold-backed gold assets, and XT is the mediating regressor, CSI and future expectation index and their sub indices that we take into account. And at the same time, this PIT is the vector of control independent variable regressors, in which we take into account the gold supply as well as we control with the equity market return, in which we take into account Nifty in order to moderate the investment in various asset class. So these are some of the results that we are presenting across investment in jewelry, bar, coins, and MCX futures investment, as well as overall investment, overall demand for the gold in India. So here with the yellow color highlight indicates that there is a significant association, and most of the empirical outcome, it shows that there is an asymmetric association between consumers households perception and expectation when they are going to invest in the various forms of gold, physical or when it is gold backed product. So we run the full sample regression, as well as we can see there is a lot of break in the given time series. So we perform the regression with this Bayes-Perron breakpoint regression, so which can provide more insights about the relation between consumers' perception and the gold investment in India. So here next table shows that across this break, what kind of major gold reform policies that we have implemented and how it is impacting the gold investment in India, along with how it is influencing the households' behavior toward investing in the gold. So just I'm going to skip this part, and due to lack of time, I can come on the main findings, results, and discussion. So again, this is a result in terms of economic situation and employment and how there is investment in jewelry. Then price and inflation and the relation with investment in jewelry. Income and spending, how it is related with the household's perception and the expectation. And CSI and FEI, we find very good results in relation to this investment in the bar and coin when it comes to the households expectation and the perception. Okay, so India is ranked as the second largest global market for bar and coin, wherein gold hold a significant value and is greatly esteemed. It serves both as medium for domestic investment and embellishment during ceremonial occasions such as wedding and festival, among others. And further we relate with the economic condition and employment, how households, they go for the investment in the bar and coins. So just I'm coming on this findings and discussion. One of the important finding of the study is that households' current perception shows an asymmetric impact on the jewelry demand, investment in bar and coin, and overall consumer demand for the gold. However, households' future expectations shows positive impact on the India's gold market. It is apparent that decrease in the current situation, that is current perception about the economic condition, employment, prices, and the inflation, income, and spending results in more investment in the safe haven asset like gold. Further, it is seen that an increase in the future expectation on the above economic indicators leads households to invest more in gold, and especially as we have seen there is a more investment, there is a trending in terms of jewelry and bar and coins. Moreover, it is surprising the relation is opposite when it comes to the financialization of gold in terms of ETF investing and gold futures investment. The positive slope of the CSI index indicate that improvement in the current perception of the household lead to more investment in gold ETF and gold futures. The negative estimates of future expectation index implies that pessimism about future economic outlook, employment, inflation, income, and expenditure causes an adverse impact on gold-backed products. So that is one of the important observation policy point of view. In addition, we find mostly identical results across other sub-dimensions of the given index. So lastly, conclusion policy implications. Our finding align with theory of rational expectation and previous studies. The results indicate that sentiment of consumers have a substantial influence on the gold market, thus proposing that trading strategies grounded in these sentiment may result in considerable profit returns for the diverse participants of the gold and gold-backed uh, gold product market. Households' perception and expectation seems to hold great significance as India is recognized as one of the most prominent market for gold bars and coins globally. The demand for gold as an investment is primarily motivated by its safe haven allure and the potential to transform these commodities into jewelry at a subsequent point in time. So perception and expectancy plays an important role for the various participant like jewelers, bullion traders. They can look through this because of this data is now available every month, bi-monthly from the RBI. Global gold producers and consumer can incorporate this sentiment while predicting gold prices. Policymaker can better forecast the level of economic stability by predicting the price bubbles of gold. In the past 10 years, decades, the government has achieved remarkable success in its effort to include the unbanked population in the banking system. Additionally, there have been significant reform in gold policy, including this 80-20 rule and the introduction of gold bond, sovereign bond, GDS, gold deposit scheme, this GMS, gold metal loan, and the revitalization of this GMS, which is now known as a revamped GMS. However, it is crucial to note that these reform can only achieve their intended outcome if they are in accordance with the perception and expectation of households. So it appears that there has been a notable increase in the level of investment in gold-backed product traded on the MCX, specifically in relation to gold futures and gold ETF. Gold-backed product have limited access. Now we need more like financialization of gold so as there can be less reliance over this physical gold. So the contemporary iteration of this GMS enables the retention of gold deposit for a duration of either 5 or 7 years with a subsequent disbursement of interest in Indian rupees upon the culmination of said term. It is, however, worth noting that a mere 6% of household have knowledge of this particular scheme. Like I think some of from the IGPC, they have presented one survey like how much households and people they are aware of with this GMS. So consequently, comprehending the process of this gold monetization in India is contingent upon perception and expectation of the Indian household. That has to be looked. So properly reviewing the data which is available from this household that can help in terms of defining the future strategy from the trader side as well as from the investor side. So overall, after considering previous studies and the research gap, our study makes the following contribution to the literature. First, it tracks the impact of consumer sentiment on the gold market. Second, we use consumer confidence, which is derived through the consumer situation index and future expectation index, which captures consumer sentiment about the current and macroeconomic financial situation with their expectation. Third, it investigates whether consumer sentiment hold the predictive ability to predict future price bubble of gold beyond other predictors. So most of the studies, they are based on conventional regressors and factors. So how conventional, like alternatively, we can look at the gold investing in India through this consumers confidence index. So lastly, households perception and expectation on the gold market in India have several policy implications. The diligent investment of households in gold, despite the increase in its price, has captured the policymakers' interest, prompting them to focus more on the process of rendering gold product more financial in nature. And additionally, various agencies and financial institutions have the potential to enhance financial literacy and financial inclusion in order to regulate the perception and expectation of household. While like still in India, we can say most of the households, they rely on the physical gold. Right now we have like many other, like we have digital gold, we have all this gold backed product, but like there is very less amount of penetration, like almost it is less than 1% people they invest in these gold backed products. Mostly they rely on the physical gold. So this study highlights how like sentiment of the households, their perception, their expectation can play an important role in terms of gold investing in India. Thank you.